John, great to have you here on Election Day. What are your expectations for how today's results could impact the markets?
Well, it's funny. It's a lot of fanfare and there's a lot of attention and people want to worry about something. So I guess this is just a good a reason as any. And at the end of the day, if we look at the history as opposed to just becoming hysterical, we can see some interesting patterns. And it shows that this goes back to about 1800 running up to 2017 with the S&P, looking at the performance after the midterms. A year later, 78% of the time, the market has been up. So it doesn't matter who wins this thing. It's not Dems versus Republicans. It's just that the market tends to like midterms and respond favorably in about a year.
Okay, well, let's break down to a couple different scenarios here. Here's what's widely expected, at least according to the polls, with the caveat that in 2016, we all learned that we shouldn't trust the polls the way we used to trust the polls. Okay, so the Democrats take the House, the Republicans keep the Senate. President Trump, of course, is in control of the presidency. What does that look like tomorrow for markets?
Well, see, again, we want to look at what's happening in our immediate future, but also what's happening in our longstanding future. And one of the things that is not going to change is the demand for health care. I mean, you've got, what, 10,000 people a day turning 65 through the 2030s. So, the Republican, the Democrats, nobody's going to change that. That's Mother Time and Father Nature and Mother Time. So we think healthcare will continue to respond very favorably, and that has been in place for some time now. Infrastructure, hopefully the Dems will get interested and require that that money that was allocated actually gets spent for infrastructure. We all appreciate that. Technology stocks have been hammered, particularly with the trade wins, the Trump tariffs. We'll see how that plays out. It may be like playing with fire on the 4th of July and you wake up and the neighbor's house is burned down. You don't know how this was going to come out, but technology is still a stalwart, no question about it. And then financials, they've been beaten up pretty heavily so far this year as well. But we know that the big banks are too big to fail and the government dollar is going to be there for them. So those would be the four areas that I think will play well, both short term and long term.
Okay, John, let's talk tariffs because you brought it up. With the Democrats in control of the House, if that ends up happening, does the tariff story change at all? Or does it not matter because Trump didn't go through Congress to impose these tariffs?
Well, we don't know. That's why I call it a wild card, because there is no basis to come to a conclusion. We don't have any sense for how this game might end. But if we looking at history, some of my great historian friends suggest to me that it was in 1930 that we established the Smoot-Hawley Act, sound familiar, to protect our farmers. And I understand it was, 20,000 goods and a 40% tariff. And some suggest that was the catalyst that converted the U.S. from going from a Great Recession into the Great Depression. So it'll be really interesting to see how much hardball each side plays here. But let's understand the Chinese do have one advantage, and that is they have they play chess as opposed to checkers, and they have a long-standing way of looking at things as opposed to having to deal with any kind of cycle. They may be able to hold back here and really see how this plays before they play their next card.
Look, they've certainly shown their savvy through this tariff race ever since we saw it initially get enacted by the president, John. On a very basic level, data has shown that if there is gridlock in Washington, actually it is a positive for the stock market, and historically stocks will rise in that scenario. Whereas if it's a case where Republicans control the House, sometimes you'll see an initial short-term pop because of the expectation of tax cuts and gains there. And then if Democrats take the House, it's really sort of a wild card. And so if we do get gridlock, which is what people expect heading into this, do you think that is what is priced into the markets right now?
Well, it may be. I mean, the data, again, going back, this also to about 1901, what people say is one thing, and the data shows something quite different. People like the idea of there being a divided, between the Congress and the president, for example, that there be some separation, and they kind of like that certainty. And we look at it historically, if it's undivided, which is what we're told is something that we don't want, the returns have been about 9% per year. when it was divided, it's been about 10% per year. So, I mean, you'll take either one of those numbers. But again, it's not like there's a fire to be put out here, or there's an emergency, or there's a boogeyman in the equation. Well, we'll take 9 or 10% for the balance of the year, certainly for the next 12 months.
Yeah, I'm glad you're keeping things in perspective, John. Before we let you go, advice for investors going into the final quarter of the year.
Great question. I'm going to suggest that, well, don't lose sleep. Do enjoy the melt up wherever that happens, as long as it does, but simultaneously prepare for a meltdown. It is very clear to me that in the cards, it's going to happen. It could be quite severe. And instead of just thinking hope is a strategy, run back and look at your statements in 2008 to see how your account performed in 2008, and then see what you might have put into the equation that would have kept the losses as limited as possible. If we learn something from the past, we may avoid repeating it. If we don't, I'm afraid that what has happened before could happen again, only the next time it could be more like Great Depression 1. Stay tuned.
I love it. I love it. And I love the idea of don't lose sleep, but prepare for the meltdown.
Prepare for the worst.
You don't have to, it's not about the prediction. It's all about the preparation. So let's get ready, and you determine what the losses you can live with, and then structure the portfolio so that you can see the evidence that it actually performed within those parameters.
All right, John Grace, dropping some knowledge on us this morning. John is a registered principal with Securities America. Thanks again for joining us.
Thanks, John.
My pleasure.